Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. This is the market update. I am your host, Bill Noble. This show is brought to you by tokenmetrics.com. If you need a roadmap in crypto and you need to make money or stop losing money, subscribe to this channel. Turn on the alerts bell so you know when we're going live. And of course, if you like the content, please give us the thumbs up. Now, as the first person on the stream said, so much for the green t-shirt. Thank God I never did it. Did get some green rubber bands. That's about it. Okay. So we got Drew X, Bull Runner, XRP, Shillbilly. Welcome. Silent Sandal from Greece. Okay. Nico, what a fake out in altcoins. We'll talk more about the Fed. Australia up late at night. Bill, are you feeling bearish? Right? Perma Bull Bill. No, not exactly, but welcome Chronic Call. We welcome you. It's crypto time. I'm long at 37,200. Been seeing a lot of that on crypto Twitter. Does my system show me the best shorting opportunities? Well, we talked about yesterday, and basically the best shorting opportunity is everything. That's an altcoin, but that was yesterday on a green day. We will talk about how to short and how to hunt going forward. Okay, Georgia in the house. Thank you. I was right about the market. I appreciate that. Right. Long Shark says, yes. Where was that guy giving me a hard time yesterday? Driftless says, roadmap, I need a bunker. Okay. Yo Notorious, we need that love from South Africa. Welcome to our friends overseas. Dressed in red, yes. We have Let's Go Rangers. Absolutely. Absolutely. Okay. Roll Tide from Alabama, Estonia, Australia up late. Good vibes. Right? Marquette, fun time. Careful, everyone. The DXY can't make up its mind. Actually, it can. We'll talk about that. Okay. We have Jason and a lot of other people here. London is in the house. New Braunfels, Cleveland. Chronic Carl says, I'm wrecked. Wookie Want a Cookie says, I love short season. Or as one YouTuber put it, burn it with fire. Okay, so welcome to the stream. Welcome to anybody who's new. Let's just do the market update. Now, yesterday was tough, right? I mean, it was tough, right? Let me adjust the screen sharing here. Hang on. So yesterday was tough because, you had a lot of people kind of up in my grill because the last thing I said was, don't turn your back on the bear. And the trick with yesterday was, a lot of altcoins, they were due for a bounce, right? There were a lot of like tactical bottoms. But what have I been saying, right? Don't do an immediate reaction to what the Fed does. Even big economic numbers, right? A lot of times the first reaction is wrong. And I know I was telling you guys that you got to wait 24 to 36 hours for people and economists to settle down, figure out what they were trying to say, and then the markets react. Okay. And yesterday was like, I don't know. I was looking at crypto Twitter at night. I'm like, this is like a moron festival where, the bigger the moron you are, the lower the price of the ticket. Or if you're a huge moron, you get free beer and pizza. And this was not just crypto Twitter. This was like macro Twitter. They're like, oh, well, we thought the Fed was going to do 75 basis points. And I was like, no, they weren't. Not in an election year. Okay. So here's what really happened with the Fed. Okay. So you wake up, and I'm going to show all the stages for y'all to look at this while I tell you what really happened yesterday. Actually, let's go through the stages, and then I'll tell you what really happened yesterday. So for our guys with the video, these are the stages of a bear market. First part, beware the failed rally. It should go up. It doesn't. It goes down. Everyone FOMOs in, buys the dip. Then it does go down, and then it rips higher. Everyone thinks it's a key reversal. Starts down 2%, finishes up 2%. Everybody buys the top. All the shorts cover. That's called feeding the bear. Because when all the shorts get out and all the little guys FOMO in, who's down below to buy it when the big guys sell? Nobody. Then once it goes down, everybody goes, oh, well, I can't sell it now because the last time I did that, I got killed. Then the market sort of upticks and everyone goes, oh, we're all going to make it. And then all those nasty bearish people that I tell you about, they come in and they just crush it. Right? That's crash part one. Then after crash part one, you get this whole idea that I can go somewhere and be safe. Don't worry, this is okay. I'll hide in Bitcoin, right? And I call that don't turn the back on the bear. Don't think that the bear's not around anymore just because maybe you can't see him, all right? And then you wake up and you get what we have today, May 5th, midday, with the market down, I don't know, everything down like 7 to 10 to 15%. Then after you learn, right, the next thing to do is to go hunting. You hunt for the next thing that's going to blow up because the market blows up in stages. So, first it was like small coins, then it was Solana and Avalanche. And then it's just going to go right on down the list, right? And this goes back to being a big meanie in the bear market because you just make a list, you check it twice, and you just short everything that's up or short everything that hasn't gone down yet. Okay, so I put part 7, you are here. We're in the hunting phase, and we're going to go through what to hunt and what to do. Part 8 is the last rally. That might be, I don't know, a couple days from now, maybe, depending on where this down move stops. And then part 9 is the systemic blow up. Every bear market ends or at least comes to a crescendo with a blow up. In the .com world, it was Enron and WorldCom, right? Right. And was the .com stocks. And then you had Lehman and all the investment banks in 2008. 1998, you had long-term capital management. Big hedge funds blew up, right? In this case, it's probably going to be big cap NFTs and Michael Saylor, unfortunately, right? So that's how this thing is going to go. And we're going to go through the hunting phase. First, let's take a brief moment to review what's going on in legacy. This is the dollar index, right? This is the dollar index. Everybody keeps trying to pick a top in the dollar index. Here's a hint. It's not going to work. Ray Dalio's hedge fund, Bridgewater, is so long the dollar and so short the yen and the euro, and they've got so much profit in the trade that every time the dollar goes down, every time any of these foreign currencies try to go up, you've got the biggest hedge fund in the world just standing over it, right? with the big old shotgun, just being like, the dollar. The yen. Oh, you want to rally? Oh, okay. Don't think so. Not going to happen. Oh, the dollar's down? Hey, everybody, look, the dollar's down. Dollar index, teacup and handle, right? On the left, you have the last dollar rally from the inflation phase of 79 and 80, from 79 to 85. Everybody at the Fed press conference is talking about the guy who was the Fed chairman back in the early 80s and how great he was and how heroic he was for stopping inflation. Yeah, he did stop inflation, but he was far from heroic. You want to talk about a big, nasty man, Paul Volcker? He came out on the tape and said, money supply is out of control, and raised rates to 20%, just relentlessly. He was like the ultimate bad man. So you had the bad man who stopped inflation, and you had Jay Powell reading an apology. So all the capital in the world is coming out of all these other countries because they're going to come over here and get, they're going to get in the dollar, because when you don't fight inflation, the world blows up. And ironically, when the world blows up, everyone wants the dollar. So don't even think about fading the dollar. Just don't. Now let's talk about Jay Powell again. So this is a chart, long bond interest rates, or the part of the bond market that sets the 30-year mortgage rate. Now, as I said, the long bond is a weird instrument. It doesn't depend on what the Fed does. The long bond is, yes, we vote yes, we vote yay, because our governments are good, they're fighting inflation, and they're fiscally sound. Or we vote thumbs down. Okay? Don't like governments. They're not doing a good job, and inflation's out of control. So when the long bond, when the bond market votes thumbs down, the interest rate goes way up. The 30-year mortgage rate goes way up. Now, in the bottom left, we have Jay Powell from yesterday, and everybody missed this. Here's what he said. We would focus on financial conditions broadly, so we would not target any one market. What Jay Powell doesn't realize, well, actually, no, Jay Powell knows what everyone else in the audience knew or didn't know, is that there is a formula for financial conditions, right? Now, guess what they are? Well, one is the 30-year mortgage rate, or like long-term interest rates, and the other one is stocks. So follow me here. Jay Powell starts the press conference, and he reads an apology to the American people. That has never happened. The Fed is a bunch of economists. They come out, they announce what they're going to do, and they say, have a good one. Now you're like, why is the Fed chairman apologizing to the American people? Well, I'll tell you why. Because as our quant chief said this morning, Jay Powell punted. He's like, guys, I'm sorry. We can't stop the printing the money. We can't stop that until September. Parentheses, because there's an election. So, have fun this summer. We're sorry, but, a loaf of bread and a gallon of gasoline are both going to $7. Sorry. Now, what he wanted to happen, and of course, the market doesn't understand what he's talking about and moons everything just because, the amount he adjusted the funds rate was less than expected. Ridiculous. Stupid. This guy was basically telling the long bond to raise rates until everything gets wrecked. He called it, we want to reduce demand. How do you reduce demand? Well, in crypto terms, you wreck everybody. You wreck everybody and you wreck everything to the point where no one wants to do anything and nobody has any money, unlike the rich people side of the equation. You just wreck everything. And historically, as we have been telling you, what is the wrecking machine? The 30-year bond. So as you can see from this graph, the giant altcoin-like green candles in this monstrous interest rate mechanism has entered the crypto bear market box from back in 2018. Now let's dive deeper. Instead of looking at the interest rate, let's look at the price of the bonds. Conveniently, there's a futures contract, ZB1, where you can watch what bonds are doing. Well, see, look what we have here. On the left, right, you had a crash in bonds, a mini crash during the 2010 midterm election year. Midterm election year, bonds down. Okay. Then you have another bond market down move that coincides with the blue line, which was the crypto crash in Bitcoin. Now you have a giant head and shoulders top in the long bond futures contract. So rates up, prices down. The price of the long bond, which by the way is having its worst year, like, I don't know, in 100 years, literally, is probably going to go down another 15%. So right now it's like down 2%. So it's down almost more than stocks. Now, of course, there's Bitcoin in the aqua line. And of course, everyone is safe in Bitcoin, right? Bitcoin is going to survive a massive, massive wrecking ball. One thing you have to understand is that the bond market is like several times larger than the stock market. So it's almost like, who cares about stocks? What matters is the long bond's going to wreck everything. The Fed wants the long bonds, wants the long bond to wreck everything. They apologize to the American people that, A, they're not really going to fight inflation, leaving the world at the mercy of the long bond, also called the long bomb. And we have to ask ourselves, are we safe in Bitcoin? Are we safe anywhere? Like, I'm an analyst, right? So my YouTube following is not as big as other guys who are like showmen, but I'm working on that, right? Got like the Notorious Bill shirt happening here, okay? But I'm an analyst and I'm trying to help you guys not get wrecked, or at least not FOMO into these bear market rallies. So the bond market is the thing you have to understand. Now, this is advanced bond market. This is the yield curve. It's long-term rates minus short-term rates. Now, normally when you have a blow up like 2008, that second component, right, the short-term rates drop sharply, right, sending this measure much higher. It's called a yield curve steepening. So in the past, when there's a blow up like 2008, short-term rates fall faster than long-term rates as the blow up happens. This is historic almost, because the bond market is the blow up and long-term interest rates could rally much faster than short-term rates, like the 30-year mortgage rate. And if you look at this chart, like, look over here, like, how far would this thing have to go? Like, could the long bond yield go from 3.5 to 6.5 by the time this is over? It's called a bear steepening, where instead of short-term rates going down, long-term rates go up. And if you look at this, the amount of room that long-term rates have to go up, even if you don't understand the chart, right? The amount, right? This little stochastic reading down here with this thing knifing up, you could have the long bond yield go up every single day, because they're not going to do anything about it. They're just letting it go. They want it that way. Now, switching back to crypto, okay? This goes back to hunting, okay? So now we're going to hunt. We're going to find the next blow up. Now, the nasty, mean bears love this process, okay? I'm a little more into it after that guy gave me a hard time for, being off on the market for 12 hours. So here we have Dogecoin. And I've marked on this chart May 8th, 2021, when Elon Musk, after pumping Doge, went on Saturday Night Live. And obviously, Doge has never looked back. It topped and went straight down. Not because Elon Musk isn't or isn't smart or isn't popular. Just that normally when, you get like a mania phase, right, where people are like, oh my God, the guy that likes Dogecoin is on TV, that's when you get out. It's the old lampshade rule, right? When you're partying and you're like, oh my God, this is so awesome. I'm going to party and wear a lampshade on my head and I'm going to stay long Doge forever because Elon is on Saturday Night Live. Forget about it. It's done. Whatever it is, it's done. Now, next up, Elon changes his Twitter profile to Bored Ape. And I'm looking at a floor price of 114. Yesterday, it was at 116. Now, let me ask you something, just seriously. If the long bond wrecks speculative assets, right, and this as artwork has obvious value long-term, what are the guys that hold this going to do if ETH and the price of Bored Ape starts to drop or correct? Okay. Well, let me tell you what these guys are going to do. They're going to protect the value of the Bored Ape by getting levered short ETH or levered short ApeCoin if that is in any way connected or will help them with the NFT. Right? So these guys are they're not going to sell out of this even if the price drops. What they're going to do is sell ETH against it or anything they can get their hands on. Sell Bitcoin, Bitcoin futures, etc. So you want to know where your big seller is. Here's one big seller, right? These are the guys that are going to get hunted by the bear. And what they're going to do is they're going to sell ETH to protect themselves, particularly if they're using leverage, if they've borrowed money against all this. So these guys are the sellers. And if NFTs, the big NFTs, start dropping in price, that's going to accelerate whatever the NFT is denominated in. Now let's look at ApeCoin. So I said don't FOMO in at the top. Our AI caught like 18 to 24. 1475 is again a key level. And I think if ApeCoin can't get above 1475, there's a shot it goes a lot lower. Now, if ApeCoin is the actual safe haven or Bored Ape and ApeCoin are the safe havens, good. Because I don't know what the world looks like if all these guys who own these NFTs have to hedge and they use either ETH or ApeCoin. So if ETH and ApeCoin and Bored Ape hold, the market may actually be okay. But if that stuff starts to give out, that's the stuff that's getting hunted by the bear. Okay, let's talk about futures, selling. Why is the market down today? It's May 5th. Why is the market down? Why is crypto crashing? Well, if you look in the top right corner, okay, you have Bitcoin futures funding rate, all exchanges by Glassnode, and everybody got bullish. Somebody got levered long. Somebody did. Could have been Sailor. Who knows? Maybe it was a hedge fund looking to protect themselves against the bond market. I don't know. But somebody got mega long Bitcoin. Okay. Which is interesting because Bitcoin has got resistance at 40K. So many people were already long that once the thing went up, it's like everyone was long and all the shorts covered. So where's the bid when it turns if everyone's already long and the shorts are out? There isn't it. There's no bid. So there's 37,500 in Bitcoin. Everybody's like, I'm long at 37K. All right. I mean, it's a range. I get it. Okay. But what people don't understand, and I got this on my Twitter, crypto_noble, and this is actually worse from our AI group, right? quant group, that if 37.5 gives way, that you're looking at 31. You're looking at 31. Okay, ETH, a little less dramatic. Okay, 2750 is holding. That's the level I have on my Twitter. 2687 comes from our quant guys. So if ETH holds at 2687, it's okay, right? The next level would be 2458. Obviously, the takeaway here is that ETH failed at 2978. Matter of fact, it couldn't even get there. So everyone's long ETH, everyone's long NFTs, everyone thinks they're safe, and I'm here to tell you they are not safe. The market could bounce off the inflation number. I'm not saying there aren't going to be any more rallies. But if you think you're safe, then you're not paying attention. Okay, here's ETH funding rates. Again, everybody long when you would figure everybody would be short. So the longs have to get out and the shorts have to get short. And this includes the NFT holders. And everybody thought yesterday that you should FOMO in after the reversal of the fact that the Fed was friendly. Meanwhile, the Fed was leaving you to the mercy of the bond market wrecking machine. Got totally blown off on this. Microstrategy earnings report said that, 21,000 is the level where Microstrategy will get liquidated. Now, the news on this was that we thought Microstrategy, based on our analysis, owned physical Bitcoin. Well, apparently they've got some leverage, and all bear markets end with somebody getting liquidated and a massive blow up. And this, to me, looks like an accident going someplace to happen. So the larger point is, if you think there's no reason for this market to go lower and you think Bitcoin is immune, right? Like Bitcoin is probably better than everything else, but it's still a cryptocurrency in an ocean, right? Driven by the long bond. So you're in a rowboat in a hurricane, okay, out in the Pacific Ocean. So Microstrategy, as we talked about for 2 days, Microstrategy is now taking out the January lows and is now back to where it was back in December of 2020, which ironically coincides with Bitcoin at 20K. So Michael Saylor is got a lot of Bitcoin, but he cannot be the only leveraged Bitcoin player out there. Okay. So if these guys, this is like Bored Ape, except the Bitcoin version. If these guys have to start hedging, if these guys have to start selling, whoever they are, they're huge. Everyone's got Bitcoin on their balance sheet or whatever, right? These guys they're not going to sit around and lose money. I mean, what do you think this is going to look like if this continues tomorrow, right? Like you're going to have war room meetings with everybody that owns Bitcoin, and they're going to look at each other and go, okay, we get it. Okay, dollar up, long bonds down. What are we going to do? And then these guys have to act. They have to act. They're either going to just leave it or they have to do something. So Bitcoin weekly chart, this is our version, right? 38,600 matters on a weekly closing basis. So 37 is interesting, right? 38 is the resistance. 38.6 is what matters. So if you get a Sunday close below that level, right, in case you're watching this video a couple days from now, you get a close below 38,600. I mean, you got targets like 35, 29, 31. It's just not good. Okay. Now, to completely pile on, no one is paying attention to this head and shoulders top in Bitcoin. And, okay, as we saw from Glassnode, not only are they long crypto derivatives, apparently, but they own crypto derivatives in legacy. CFTC data showed everybody and their brother bought Bitcoin futures. Why? Well, because they're safe in Bitcoin, right? Don't get hunted down. Just as a point of information, we told our premium customers that we didn't like, or we did like, how our Token Metrics AI grade rallied and then crashed in Bitcoin and stayed at like 20% when 80 is bullish, even as everybody was doing the whole FOMO thing. Okay. Not to mention the fact that our stuff went bearish and got people out a while ago. So, Token Metrics can give you the hints, right? Can give you the clues. You still got to do the work, but that's what I'm here to help you with. Okay, continuing with work from our quant department. Avalanche rallied back to prior support near the mid 60s. It couldn't get anywhere as near where our quant guys had resistance at 75. And there's nobody home until 49. There's just no one there. There's nothing there, right? It's actually lower than that. It's actually 40. So again, what is the real point on this? Is it to hate on Avalanche, or is it to tell you that if the long bond takes out speculative assets, what is going to happen to all this over-owned sludge in the altcoin space? It doesn't matter how good the technology is. Nobody cared in 2001 or 2000 about the quality and the future of the internet. Nobody cared. When the Fed goes on the warpath, risk assets start going down, that's it. It doesn't matter how good it is. Okay, Solana. This picture is actually not as bleak. This comes from our quant guys. So Solana goes to 95. That was resistance. It failed there. That's not a surprise. Supports at 81. What freaks me out is it could never test it. And one of the things you're going to learn in these down markets is that when you get support, but it pulls up short, right? It'll bounce, but then when it goes back down, it'll blow through the support point like it wasn't even there. So Solana at 66, possible, right? Near protocol, God, heartbreaking, right? Gets above 1184, goes right to our quant resistance at 13.2 and fails. This is like the best of the best of the best of the best. Everybody's selling rallies, right? I don't know where this is. We'll check on it in a minute. But when I saw this thing down, I was like, oh my God. Okay, now, is there such a thing as an altcoin that you can buy? Is there anything out there? Well, I don't know. I mean, if they don't hedge with Bored Ape, maybe it's Bored Ape, maybe. Helium to me seems like a better play, right? Helium and GMT may be like the stories that are out there. Like somebody's going to build on Helium and that narrative's not out there yet, right? And then GMT is this whole workout to earn thing. So in case you're getting wrecked, you can just work out and earn money. Okay. And then just to underscore it, S&P took out the stops. SPY failed at 424. Stocks may bottom out. That may help crypto, right? This may be a temporary thing, like for a day or two. That'll be the final bounce. Okay. Then VIX will probably go above 40, and then we'll see where crypto is when that happens. But if you think that speculative assets cannot get destroyed here, you best think again. All right. So final chart, ARK. ARKK is highly speculative stocks, the altcoins of the equity market. So as you can see, ARK, Cathie Wood, right? That's the founder. We thought that it might be over in ARK. So that was wrong, right? Because she's like getting, threats to her safety. And I was like, you know what? Let's plot the altcoins of the stock market versus Bitcoin. Because I know Cathie Wood has got a fund that's got a lot of Bitcoin in it. So you weren't safe in ARK. ARK and Bitcoin went up together, and people were asking me, should I get short altcoins? Okay, well, maybe, but you know, everyone's acting like they're safe in Bitcoin. And the question is, are you? And that is the market update. Okay, let's get in the chat. Let's check the comments. And let's figure out where this market is and what we're going to do about it. All right, let's get in here. Taz, Litecoin under 100. I know, bro, that's brutal. Okay. Okay, Mr. Vicente wants me to change to green. Sir, that may take a while. Okay. Solana has FUD. What's going on with Cardano? Okay. Let me get all this down. Okay, somebody's saying 14K BTC. I actually have 17 as the worst case scenario. Okay, even the stuff that I like Litecoin. Lee says somebody fed the bear. Okay. Okay, Critical Mass Jim says all FUD. Okay, there's a difference between FUD and analysis. There's a difference between FUD and getting people out of the way from a bear market that people don't understand, right? Because it's legacy and Fed driven. Like the last crypto bear market was driven by what? Excess in Bitcoin with a little correction in interest rates, like a little bit higher interest rates and a little bit of a correction in the stock market, right? Not to mention ICOs coming out, which, you know, had very limited value. They were the NFT, you know, NFTs could be the ICOs of this market, which is, you know, I understand art will hold value better than stocks, but that doesn't mean that there can't be a wipeout and massive hedging as a result of it. Okay. Okay. Smash the like button, please. We appreciate that. Okay. People with dry power are in heaven. All right. That is true. Okay. Brian says this is like 2018. Okay. Massive bear market. Okay. Huckleberry says, you know, the long bond is a wrecking machine. Okay. Somebody's commenting about the Fed, okay, being sort of catering to rich people, right, by printing fiat and overvaluing stocks. And 4 decades of that unwind is now taking place. Wow. Why didn't I think about that? You know, you want to talk about rich people, and because you got to think about it, like who's bidding up everything. Prices can't go higher unless someone's willing to pay them. So you got to wipe out the people with the money in order to stop it, right? Joe likes the Oakley hats. Let's get to 1 million followers so I can get an Oakley endorsement deal. Okay. Driftless, we appreciate you. Okay. Okay. Some guys sold some stuff. Okay. All right. Now let's get into, okay, what people are undoubtedly, somebody asking, what did I post on Twitter? Basically, I posted GAN work that, you know, suggests, right, that if 2750 in ETH gives out, there's nobody home until 2300. And there really hasn't been any support on the Bitcoin hand-kept GAN chart for a while. There's been no support. Now, I haven't made a big deal out of it, and it's a good thing I didn't, because this thing just, you know, did the whole false breakout thing to the upside and then just turned around, and there's nobody home until like 33. There's nobody home, right? So if hedging pressure starts coming in, the whole thing just breaks. Okay, so let's go. Let's just go through everything. Okay, so this is Bitcoin 4-hour chart. 36,500 is DeMark support, right? There is a broader lesson here.
Bill, you're not sharing.
I'm not sharing. Thank you. Okay. So 36,500 is support. Now, what is the most important thing? DeMarc's Elliott wave tool, right on the money, right? A, up, B, down, C, FOMO, up, crash, right? This is why that particular tool is useful, okay? Okay, same thing in ETH, okay? And again, this is higher time frame. So 2757 is like resistance, okay? I had 2750 on my Gantt charts. You know, the only thing I have below that is something like, I don't know, 2600 maybe. Let's just go to ETH daily. Okay, so this is really ugly. So these are my Gann, like these are my Gann DeMarc wave bands, right? ETH comes up to the band, stops, turns around, goes down. Like it's like they knew it was there. And I'm going to put the sequential on it. Okay, so what are the whales doing? Okay, are they 10x? Is it time to get 10x leverage short? Okay, it's never time to do 10x leverage anything, especially when the market is down, right? In other words, if you want to short, don't do it on 10x leverage because that's when people get squeezed out. I'm guessing there's one more rally between now and the inflation number. And if that rally happens, that's where you short it. The only other way I would do it is if you have a short and you're making money and you add leverage to it. But remember, you got to remember this now. In bear markets, everybody loses money, bulls and bears. People get squeezed out. It's brutal. Okay. Now, I've been talking about the guys who are good at bear markets, but most people are not. So the key in bear markets is to protect yourself. Okay. Now, here is one piece of good news. We're headed for a 13 bottom on the Bitcoin daily chart. So the way I would read this is there is probably going to be a selling climax in Bitcoin. Now, maybe that selling climax is today, okay? Or they'll register the 13 bottom and then they'll take it down to 33 or 31, possibly. Or the 13 bottom will be today and they may try to bounce the market. It depends on what happens at 2750 in ETH. But there is probably going to be some sort of climax, selling climax in Bitcoin. Is it 36? Is it 33? Is it 31? We will find out. Let's go to the intraday charts. Okay. So on the intraday charts, you've got some pretty extreme readings in Ethereum on the 90-minute. You've got a DeMarc 9 bottom, which means this thing may hold up for, say, 2 hours. You got 2 hours to figure it out. Okay. Now, Bitcoin on the shorter term charts, this is what I'm talking about, right? When I talk about what happens when something goes from trend, like the 1 through 9 is the beginning, and then the big trend starts. So, we got, sort of like probably Friday, Saturday, Sunday of down Bitcoin. Okay. Now we're going to go to GMT. So GMT is getting wrecked like everything else, but GMT does have support at 250, right? And GMT is probably as overextended on the downside as it was on the upside. So I'm still interested in this coin. And for Nano, all right, let's take a look at Nano. So Nano is actually holding its value, which is interesting. That's interesting. And as a reminder, okay, just as a reminder, April was the 13 top in Ethereum on the monthly chart. And as you can see, despite the fact that, it looks like the whole world is burning, really all ETH has done is go back to where it closed April. So what's really happened in ETH? Nothing. Nothing. Except Jerome Powell has told you that he doesn't give a shit if the market goes down. He doesn't care if long bonds wreck everything. He does not care. As a matter of fact, it's not that he doesn't care. That's his preferred, that's his weapon of choice. Okay, let's try to go to layer ones. Morpheus says bear markets are where legends are made. That's actually true. Okay. Friends coming in from Bangalore, India. Okay, so this was Metis this morning, charting it for some guy, basically telling him you got to be careful at 60, right? Here's Luna on a daily chart. Okay, Luna never rallied yesterday. Actually, this was the big warning that Luna never rallied. Okay, now helium is down. Obviously, everything's down. But I'm interested if there's a selling climax in helium near 12. Okay, let's get over to Cardano because I know people, they want to know about Cardano. Wow, that Cardano was such a heartbreaker. I mean, man, they squeezed that thing. That was really unbelievable yesterday. Oh my God, look at this. Okay. I guess the important lesson here is, you got to be careful of FOMO. So I believe the answer yesterday was $1 might be home, but what it really is it's like you buy it at 78, you sell it at $1, and now all you can hope for in Cardano is that ETH doesn't break down and this holds. Okay. All right. Somebody's asking about NEAR. By the way, XMR, right? Monero. Okay. Token Metrics' grade got you out of this very early. Okay, I'll let Token Metrics come up while we go through all of this. So NEAR protocol. Okay, so again, this is the 90-minute NEAR chart. All right, obviously this is the 9 bottom and there's going to be a counter trend rally. So, this is down a lot. 11 was support-ish. So there will probably be a bounce. And then if the bounce fails, that's when you have to start worrying. Okay, let's just go through all the layer ones because people are going to ask. Okay, so again, off a 90-minute chart, right? Solana does the first part of the trend, does kind of like a double bottom at 82. Maybe we have to go to a higher time frame on this. GMT is getting wrecked. Okay. Okay. Somebody wants to know if you can DCA long gold. I'd wait for the long bond to get to at least 3.5% before I did that. So here's the ugly news in Solana, right? Like, where's the DeMark work on this? There isn't any. Like, Solana just shows this is just starting. Like, it's just like nothing here. So if there's a bounce in Solana, this is like open for whatever they want to do. And there's nothing here, literally. And this is everywhere, right? Like either there's no support or the DeMark work is like just getting started. You're the 9 bottom waiting for a bounce, or you're like Solana where it's just like, oh yeah, we're just gonna get started here, right? Avalanche is the same thing. Now Avalanche, you may wind up getting a 13 bottom at some point. Up there it is. Look at that. Can't make it any better than that. So this could be the 13 bottom in Avalanche, and this may be the only thing that stops the market from crashing. Now, I will tell you this. If you have a 13 bottom on the daily chart of Bitcoin, and you have a 13 bottom on the 4-hour chart of Avalanche, and that does not stop this market from going down, forget about it. It's done. Over. Okay? So you got to be really, really careful about this stuff. Okay? So to drive this point home in Token Metrics, right? I'll let this come up and just continue doing the DeMark work. So we'll see if this 13 bottom means anything, which means you might get a bounce around the equities close. And if that bounce doesn't stop this market, then everybody is just going to unload. You could be looking at Black Friday and then Black Monday. Just saying, right? Because of what I would call the lack of support. Okay, the lack of support. Okay, somebody was asking about, okay, let's do Cosmos. I understand Cosmos is doing like a big airdrop. Okay, so there's the 13 bottom in Cosmos on the 4-hour chart. And now we have to wait and see if anyone cares. Okay, the support in Cosmos right now is at 1636. Let's go back to the market and just check where everything is. So Bitcoin's down 8%. Total 3 is down 7%. So let's bring up daily total 3. This is going to be one of these days where I'm just going to have to go through everything. So yesterday, this was pumping. It was pumping so hard, it looked like it was going to the moon. And I can't exactly remember what I said, but I'm hoping I said, don't FOMO into this. So this is at the bottom end of its range. Okay. Total 3 has done nothing but zoom around. But if you look at the weekly chart, right? Remember how we had that awful pattern, right? In long bonds, you know, you got the same pattern in total 3. You got this head and shoulders top, and you could be talking about losing something like $200 billion in market cap. I mean, I don't know how anybody's going to stay long if that's what's going on. Okay, so Cardano, the best case scenario for Cardano is a range between 77 cents and 90 cents. Okay, let's try to go back over here. So if you're going to use token metrics, I think there's a couple ways to do it in this market, right? One, you have to keep track of the scores of the bigger coins, right? In other words, you have to watch what the scores are for the biggest coins. So Bitcoin is 29, ETH is 28. So, you know, a lot of times, sometimes maybe it gets down below 20. You think about it, all right? But it's not something that you want to do. And then I think, you know, if you have a crypto portfolio, right? It's just this simple. So if you have a crypto portfolio and you wake up tomorrow, this thing adjusts midnight Eastern. So the All Exchange Index was picking through some of the top coins. Ethereum name service was in here and that did well. If you wake up tomorrow morning and this thing is in cash and gold, then you know there's another big drop coming, right? The fact that this thing got blindsided this time was a function of the Fed. Okay. Right. I did say, when does it pay? When have you made money buying rallies? Okay. So, I realize this is all pretty extreme. So let's just check intraday charts on stocks. Okay. So, S&P futures really haven't done a whole lot. They're still in this like band. I mean, yeah, they're zooming around, but if we look at a 4-hour chart, I think at some point, it's kind of ironic. I mean, stocks have to go down, I think, but there are certain components of the stock market that are actually better than the bond market. So yeah, S&P can go down to 4,000, right? That makes sense, right? Especially if crypto's getting wrecked. But the thing that you got to be careful of, and I think bonds actually close soon, which could be why everybody thinks that everything is all right temporarily, right? I mean, the long bond is down 2% today. That's unbelievable, right? It's unbelievable. And then, to completely pile on, DXY, right? Everybody thinks it's the top and then it just rips higher. It's actually, I don't know if it's going to move out of this regression band. I don't know what it's going to do. Okay. So, I just need to really like drive that particular point home. Okay. Somebody says buy silver. Okay. Some love from Arizona. All right. So let's go through. Okay. So let's do something different today. Let's see if we can do Cardano on Token Metrics and see what we get. So you want to be really careful when you get this thing where the grade goes up, stays up, and then crashes. This is what happened to Cardano in August, right? The grade went up, Cardano went up, but then once the grade crashed, right, the yellow line, once the grade crashed, that was the end of Cardano. Now, hopefully that's not going to repeat itself here, but when you see these grades go up and then stop, it's over. Right? It just does not pay. It does absolutely not pay to buy the dips once the trend ends, right? And this is like the mathematical evidence, right? Like Monero, our computer picks it up. Monero's at 158. Monero goes to 267. The grade falls out of bed with Monero at 218, right? And now Monero is subject to what the rest of the market is subject to. Okay. Right. So Mr. Horvath says the student loan debt forgiveness should dilute the dollar a lot and pull down DXY. Folks, we're printing the dollar and they're still buying it in the currency market. They're still buying it. Now, if they forgive student loans, what does that do? That wrecks the bond market, right? Now, eventually, this could wind up affecting the dollar, but how is that going to happen, right? When you have, like, this is like the yen, right? Like, how's this looking? This is the yen daily. It's the yen contract, the yen futures contract daily, right? Basically, just does nothing but go down. The currencies that are getting trashed from printing are in Europe and Japan because they've said, we don't care. We're not going to have our central bank blow up. We're not going to have our insurance companies blow up. So we're not going to raise interest rates. We're not going to wreck our bond market. And we're just going to let this crash. This is the yen and the euro. So everyone is looking for a top in the dollar and they're not going to get it. I know you want to top in the dollar, but I mean, look at this. Like, this is housing. So how much denial is out there about interest rates? It's not just crypto, people. This is housing. This is XHB, home builders, right? They were FOMOing into this yesterday like it was their job, right? And in reality, the support, the ETF of home builders is at 62. The actual support is at 54. There's nobody home. You know what I'm saying? There's just nobody home. All right. I don't know if Taz is still out there, but let's try to go through stuff like Litecoin. Try to see how much damage there is. And then we'll go through like a strategy on what to do with this. Okay, so this is the 90-minute chart of Litecoin. You get the 9 bottom. That's not a 9 bottom. And it just starts to count down. Painful. Okay, it's at an 11, which probably means you got 2 more epic down days. Like, here was the last 13 bottom in Litecoin, right? It was like, you know, down, up, down, down huge, and then back. Okay, that's probably what happens, except we don't know how much down, down, down there is before it stops. Okay. You know what I'm saying? Like, you know, you look at this stuff, you know, you thought Zilliqa was going to be good if it got above 10 cents. It hits 10 cents and just blows up, right? They just pulled everybody in on this and dropped it. And then there's this whole idea about like Vulcan and the metaverse where, okay, it's a 90-minute chart. This is the 9 bottom. And pretty much you've probably already seen the corrective bounce in metaverse. Okay, please repeat Ethereum. I can. Okay, so let's just go to Ethereum because I think at this point you're looking at 90-minute charts and then maybe we can do a long-term view. So the ETH roadmap is, don't forget, April was a 13 top. And now basically ETH is right back to where it closed April. So everyone's like, oh my God, I can't sell it because it's down. It's not down. It's exactly where it was at the end of the month of April. So 2750 is like the key level in ETH. I have it here. You know, we have some different numbers on Token Metrics. Okay. If this is not above 2750, it's done. Right. And the reason it's done is because of this. Right. These guys who own this are not stupid. Matter of fact, they're probably some of the most sophisticated investors in crypto. So since I've been talking, this lost 4 ETH off the floor. You know what I'm saying? Like, the bear is going to go hunting, right? You turned your back on the bear and the bear goes hunting. If this goes below 100 ETH, okay, you're going to have massive leverage selling coming into ETH to try to protect the asset because it is an asset. It's a status symbol, right? I mean, this is not going anywhere. I don't think any of this artwork is going anywhere. Let's just check Azuki. And I was at the party. I was in Los Angeles when this thing topped out, right? Or when this thing actually, exploded. Okay. You know, the FOMO to get the airdrop for this stuff was, you know, that was some pretty intense FOMO. Okay, Moonbirds. Okay. All this stuff that's trading at 28 ETH may not be as vulnerable, but it is subject to like the long bond wrecking machine. It is. So you better pay attention. If you've got ETH-based exposure, right? I wouldn't imagine as many Bored Ape guys or Azuki guys or CryptoPunks people listening to the stream, but if you are, welcome. Okay, the point is this stuff can move around, but most people are long it from much lower levels. Okay, again, what are these guys going to do if selling pressure comes into NFTs? Are NFTs a bubble? I don't know. It's artwork. That's a whole different market, but it's artwork priced in a highly volatile currency. Okay, so first everyone was buying ETH because they were hiding money in NFTs. Then everybody was buying ETH because they were puking out altcoins and paying the gas fees to get into ETH. So I know that ETH's got a good supply story, but who is the marginal buyer of ETH going to be if ETH-based assets have to be hedged? The answer is there isn't any. There just isn't any, right? And that's the problem with bear markets, right? Once you've turned your back on the bear, that's it, right? It's like the hunting phase begins. You have to hunt for things to get short, and the bear basically hunts you. Okay, somebody was asking about Chainlink. I know a lot of people wanted to buy the dip in Chainlink at 11. I did not necessarily encourage that. Okay. But, like I said, Chainlink at 10, kind of tough to hate Chainlink at 10, right? It's a 9 bottom, so we'll see how long that actually holds. But, again, you got to remember the Elliott wave stuff, right? It's A, B, C, and then they drop it, right? So, yes, you did get the bottom in Chainlink, but all these people who bought the C wave are now losing money. So this is going to come back. There's going to be a bounce. Okay. There's going to be a bounce. Nothing goes straight down. But the thing is, if ETH doesn't clear 2750, I mean, that's it. Right. I mean, this thing's going to have one last shot. And if it doesn't make it, it's game over. Right. Okay, so Polkadot, basically the same picture, right? 1466 is the level it's got to get back above, right? If you look at Polkadot over here, okay, we'll get it running on Token Metrics while we look at other stuff. Yes, by the way, don't forget to hit the like button. Okay, will Ape ever bounce? I lost a lot of money. All right, well, sir, we're sorry you lost a lot of money. Let's check Ape. Okay, I'm worried. I'm worried about selling pressure in Ape because of Bored Ape, right? Like Elon Musk mooned that so hard, right? I mean, it's like he mooned it and it got dropped. So I'm looking at Bored Ape. It's got to get above 1475. If it goes below 1176, you're looking at major problems. There should be support in this area, like either at 12 or just below 12. Okay. So, if you're already down 40%, just wait to see if ETH holds. And, you just got to keep an eye on what's going on over here. This is going to, this is what's going to drive ApeCoin, right? If Bored Ape it starts to go down, ApeCoin is going to go down harder. So Polkadot, another example, right? The grade goes up, Polkadot goes up, right? As soon as the grade drops, Polkadot collapses. The grade is actually moving before Polkadot does. So right now you have kind of a dead grade, right? And then if you look at Polkadot and you try to figure out how it's going to come out of this. I don't know. It's tough. It's tough to even draw stuff here. I mean, what looks like is happening is that Polkadot keeps trying to break out through this diagonal, but it just can't make it, right? It breaks out and then it comes back down to it. So Polkadot may be headed for 1347 is the level. Okay. Let's take a look at OGN. Okay, let's get that cooking on multiple systems. Okay, somebody's looking for $8 in Chainlink. Dean H says sell in May and go away happened. Yes, it did. And this may be the warm up, or they're just going to do it all at once. I thought about that, right? Just, sell in May and go away started, right? I don't know, late April, right? There's like an Arnold Schwarzenegger gif. It was like, get out, get to the chopper. That's like 2 weeks ago. This thing may end in just a huge crash. Just a giant margin call, which again, in the history of markets, that happens. That is not the end of the world, right? It's not. They just purge it. They just blow it out. Jay Powell just sits and, has some iced tea because, he apologized to the American public, told you to sell in May and go away. He's leaving. He'll come back to raise rates and stop printing money in September. Meanwhile, probably all the damage will be done by the time he starts doing that, because he's going to let the long bond do it. Outsourcing. So OGN, right? 41 cents. Just on the 90-minute chart, it just kind of looks like it's getting started, really. I mean, there's a good support point there. That's the good news. But, if it doesn't hold, we're getting to this point where I say, if it doesn't hold, ... If it does, okay, right. But, if you get another day like this in the long bond, like, what are they going to do tomorrow? Like if this is the uptick, right? Like if you look at Luna on like a 90-minute chart, so it's like A, B, C up. That's the correction. So correction over. Then it goes 1 through 9 down, takes out support at 82. So if it bounces, that's where the support is, right? They puke it and then they bring it back, right? And if it fails on the rally, then it just goes 1 through 13. It just becomes a crash. And actually, this was the warning sign because this didn't go up yesterday. Now, some good news in Luna, right? So on the daily, on the 4-hour, there's a lot of support at 79. So if 79 holds, then this might be okay. But if they close this thing below 79 today or tomorrow, right? Dean says these charts look like trash. Dude, I mean, this, when you break charts, when you break the charts, my experience when every chart looks broken is that there's a counter trend rally. So you get like a minor bounce, right? And then that's it. Right? Like if the last bounce fails, then it's just done. Okay. So Matic, very difficult to get negative Matic at $1, honestly. So let's go to a daily. So you got the 13 bottom today in Matic along with the 9 bottom. This along with Helium may be your value plays. New listener, while I'm outside mowing the grass. Sir, we welcome you. We appreciate you. Anybody out there who's listening for the first time, we welcome you to the show. This is where you go to get on-demand TA, and this is where you go to get no BS analysis where every time it goes up, the average YouTuber is telling you that it's going to a new all-time high. And I am telling you until further notice to buy a red shirt and GTFO. Okay. You buy this market when despair is so high and a rally is unimaginable. Okay. Flux. Okay. The support point is $1.42. You know, you might have to go out to like a weekly chart. You know, this is what starts happening. Like you're trying to find support. So you get this huge rally and then it comes back down again. I don't know what we got on Token Metrics. The site didn't work there. Chris says, at least Bill's honest. Yes. Thank you. I'm trying to be honest. I'm trying to give it to you straight. Okay. Hopefully I can wind up the first extremely popular, honest guy on YouTube. Market keeps trading like this though. Don't forget to tell your friends where to go to get the right information here. Okay. So let's just end off with this. Let's have a laugh. So this is my hobby. This is the chart I keep by hand. Okay. This is the false breakout from yesterday. Unbelievable, right? Took out like 3 Gann lines. This is 2750. And as you can see, right where I write nobody home, I can't find any lines to support ETH until 2300. Okay. Bitcoin is worse, right? 3350, right? Look at this false breakout above this angle. I mean, this looks like it's going to the moon and beyond. The same thing happened up here. And this line is a very important line. Okay. Now, again, just philosophically, if the Fed starts pulling $95 billion a month out of the system, that starts in September, by the way, who buys US debt? So that means the Fed is going to actually say, you know what? We're going to actually drain $95 billion a month out. Well, if they're not printing money, who buys our bonds? Japan, Russia, China, the Fed? The answer to that would be nobody. The second question is, what happens to portfolio managers who only know how to be mindlessly long? This includes, this could be crypto, this could be bonds, this could be stocks, this could be NFTs. Like, what happens to all this like long and strong guys? Like, they don't know what the bear market looks like. They don't understand it. They've never seen it before. So that's what I'm talking about when people get wrecked, right? When people get extremely wrecked is when they're in an environment where they don't understand what's happening. And again, it's not easy, right? Like understanding what the Fed is trying to tell you and then linking that to legacy and stocks and crypto, right? That's why they keep us old guys around, right? Because we've seen all this and we know that, you know, we've listened to economists. Like, there used to be economists at Wall Street. Their job was to interpret Fed speak. And when he read that apology yesterday, if you were wondering what he's apologizing for, this is what he's apologizing for. That and $7 gas, because I'll cover oil in a second. So Phantom on a weekly basis. Well, this was the 9 bottom. It comes back for 3 weeks and then starts to go down. So, you know, Phantom was a good buy at 70 cents on a weekly basis. There really isn't any support until 20 cents. You know, that's just, you know, that sounds just so stupid to say on the air, but, you know, that's what the DeMark work says, right? Now, on a more realistic note, today, like a couple of these things, it's maybe a 13 bottom. So you have a 13 bottom going on in Bitcoin, Phantom-matic. So that means you may have a huge puke today, and then there may be a bounce. Now, if you go back to the PowerPoint, right? So let me end with the PowerPoint. So I'm going to stop sharing this. I'm going to bring the PowerPoint back up again, right? So here's the PowerPoint. Whoops, I got to share it. So beware the failed rally. Don't feed the bear. I'm afraid to be short. Everything's going to be fine. Crash. Don't turn your back on the bear. Crash. Right? Then there's the last rally. Okay. So today, May 5th, we're on, we're hunting for the next blow up. Then if you get the last rally, that could be today. That could be 3 days from now. Maybe there's a small rally today and there's a huge dump. Then there's a big bounce. Then that's it. That is it. Okay. Take a picture of this with your phone. We're in the hunting crash part 2 phase. There might be a small rally. There might be a big rally, but the last rally is coming. It could be small. It could be big. It could come from 37K. It could come off 31K. Okay. And then after the last rally, that's when somebody big blows up. So not exactly cheery stuff for crypto, but the most important thing is, you want to not get wrecked. Don't get wrecked. Everybody loses money in a bear market, including people who try to give into the greed impulse and get short when the market's down 15%. Now, if you go back to Token Metrics and you go to that all exchange index and you get the crash warning, okay, then maybe you can try that. That's how I would do it. I will be back here tomorrow. Tomorrow, we will get you set up for the weekend because it may be one hell of a weekend. All right. Let's sum up. Yesterday, in a lot of ways, should have been a reversal because the Fed was actually more friendly than people thought. But the reality was the Fed passed the buck to the bond market. And if bonds continue to get wrecked, everything's going to get wrecked. So US 30Y, ZB1, TLT, keep an eye on it, right? Now, if you have a crypto portfolio and you have not adjusted risk, right, then maybe it's time to call your accountant and think about, what do I want to give up on here from a tax loss point of view, not investment or tax advice. Okay. The last rally is coming. It will be small. It will be big. I don't know. Right. But what I do know is when the blow up starts, I want everybody who listens to this show to be safe. Okay. Now that blow up could last a day, a week, a month, or until August. I don't know yet. Right. But what I want you to do is be psychologically ready. So watch the video, share the video, like the video. Did I mention like the video? Like the video. All right. This is Bill Noble. I will see you tomorrow.